If you're long biased Bitcoin right now and you think that Bitcoin is going to continue to go towards the upside, that means that you're long biased on the S&P 500 and other traditional assets. We can see in the chart in front of us that Bitcoin right now has a high correlation with the S&P 500 and the Russell 2000. Looking at the data provided by Binance for the first quarter of 2020, we can see that BTC is correlated with the S&P 500 with a positive correlation of 0.57, and it even has a higher positive correlation with the Russell 2000, which represents the small caps within the market. For the individuals that say that Bitcoin is the safe haven asset similar to gold, in my opinion, we don't see that correlation yet. We actually see really no correlation at all with 0.09, but what I am speculating is that they will start to see more of a positive correlation as the year continues. Getting into more recent time frames, we can see within the last 90 days, we can see that the correlation of the S&P 500 and Bitcoin is increasing substantially. We saw almost no correlation at the beginning of March. We actually had negative correlation at one point, but soon after we started seeing that market correction, we saw that correlation, that positive correlation between Bitcoin and the S&P 500 absolutely skyrocket, and it's still increasing as we speak. Which brings me back to my point that if you are long Bitcoin and if you think that Bitcoin is going to go above 78, above 9K, 10K, and the bull run has commenced, that means that you are assuming with the positive correlations that we see within traditional assets, that you're going to climb out of the hole that we're in within the S&P 500, Russell 2000, and other traditional assets. So then you're probably thinking, well, what's the possibility of us actually climbing out of this? And this is sort of like 9/11 or a flash crash or some other event that we got out of without too much damage within the economy. Well, we can see that the IMF stated that the global economy could suffer its worst year since the Great Depression of the 1930s. So you're thinking, how did the 1930s look? Well, we actually have the Dow Jones Industrial Average shown on a chart during the 1930s Great Depression stock market crash. Now, before we actually go view the 1930s stock market crash, let's first analyze what we currently see within the markets. So first, starting with Bitcoin, we can see that the price has hit the 50% fib retracement level, which means that it's gone up 50% from the low, if you're counting the high that we've seen at around, let's say, 10.2K. On the S&P 500, we're seeing a very similar situation, but we're even seeing more push to the upside than BTC, with the retracement hitting in between the 50% and the 61.8% retracement level. Now, on the other hand, the Russell 2000 hasn't even made it above the 328 level, not even close to the 50% retracement. So the small caps we can identify are seeing less buy pressure push the price up, whereas we can see the SPY or the SPX is seeing significant buy pressure keep the price creating higher highs and higher lows. So there is high correlation here, and my speculation is that the next dump will bring Bitcoin with it. Now, I do think there is going to be a decoupling at one point within traditional markets, and Bitcoin will be on its own a non-correlated asset like we've seen in the past. But right now, with all the uncertainty, all the volatility, all the emotion within the market, we do see a high positive correlation with Bitcoin and other traditional markets. This is the Dow Jones Industrial Average from 1917 all the way up to the peak around September 1929. We saw that there was a massive sell-off that occurred, dropping initially the price all the way down plus 44%, 45-ish percent. What we're looking for is to extrapolate what we can find, what worked, what didn't during this market crash. Because like we've seen before, this is going to be just as great as the Great Depression, as some economists are predicting. So looking at the last Great Depression obviously gives some understanding as to how price action reacted during this crazy time. So we can see after the massive sell-off, we actually got a long drawn out series of higher highs and higher lows. And where we're looking is going to be between the 50% and the 61.8% retracement level. This is going to be our key level of supply. What we're looking for is weakness within the bulls around this zone. This would mean it's breaking an ascending zone, a horizontal level of support, creating a series of lower lows and lower highs. You're also looking for, in terms of the candles, bearish engulfing candles, double tops, long wicks to the upside, signaling that there is sell pressure within the market. So now that we both understand that, in my opinion, Bitcoin is going to have the next move down if the stock market does correct. So now the speculation is, will the stock market correct? Will it go back to its lows? Will it test 2200? Well, we can see the relationship that we have within the current price action, which is this chart right here. This is the current price action on the 4-hour chart for the S&P 500. And we can see back in the previous historic timeframes of the 1930s, this is the initiation of the Great Depression. Now, what we can see is some significant similarities in my personal view. So let's first break down what happened. This was the all-time high back in late February of 2019. This was the all-time high back in September of 1929. We got an initial massive push to the downside, which seemed like a massive push initially, I'm sure, which in the current price action it did. So we got our first push to the downside, creating our first major impulse move. We got the exact same thing happen here, like so. What did we get after that? We got a corrective move because the market moves in waves. It makes impulse and corrective moves. So we got, after our first impulse move, a corrective move pushing the price back up, like we can see right here. Now, after this corrective move, we got a massive sell-off that pushed the price significantly further down than any other historic move in the past, couple decades at least. We saw that in this move. 2008 was not nearly as this quick, as this bad, as this aggressive move to the downside. Dot-com boom was not this aggressive. 1929, same thing. This was an absolute capitulation in terms of price. So that was capitulation mode in 1929. So we're getting a similar sort of situation here that we're seeing. Massive push to the downside, massive push to the downside. So now we are full aware that this is full recession mode in my personal view, same thing as 1929. And then you start to see this retracement, this slow pullback that is increasingly getting longer and longer, overextended in my personal view. But for the permables, for the people that are buying the dip for years and years and years, they're going to think that it's recovered. Same thing here. Obviously, I don't exactly know what the sentiment was during this time period within the 1930s, the early 1930s. But I'm sure it is somewhat similar to what we see right now. 1930s was a very different time. We obviously are facing a pandemic, and didn't really have that back then, but looking at the price action, we can see that it's actually very, very similar. So in 1929, we hit 50%, we did not hit 61.8%, and then we looked for weakness. We got one massive push to the downside, or corrective move, massive push to the downside, and then we'll talk about what happened later, because it's basically the exact same structure that we're looking at with the swing high and low. But basically, we can see a very similar structure on both ends. And then what we are going to be continuing is the creation of the swing high, the swing low, use our 50%, 61.8, or the 382, the 38.2 fib to identify key areas of potential supply, where we're going to be looking for price action patterns that are going to allow us to enter short positions that have a high probability of moving to the downside. So that is going to be our plan for cryptocurrencies. We do not expect this to continue to the upside. We are expecting this potential leg down. And let's now go to the price action of Bitcoin to finish off this video. So right now on the 4-hour chart of Bitcoin, I currently see the market as a consolidation sideways. We were holding a descending trend line with the anchor point here. We saw a lower high, lower high. Now what we did do is actually break this series of lower highs. So we now are going to view this as a potential horizontal zone of resistance. Initially it was a descending zone, but once we hit this recent high and surpassed it, I'm now going to look at the market in a consolidation. Now, I don't really see a mid-range zone that I'd like to trade, but I am looking at the market at around 70 6,400 at the high there, and then our key level of support is around 6,700, and we're currently just bouncing from resistance to support. It's really noisy. It's pretty volatile. We're seeing strong moves to the upside and downside. I did see this head and shoulders, but it does seem like it is now invalidated because we now broke above the right shoulder. So at this point, I'm going to keep it very simple. We're just in a consolidation sideways. I'm not really looking to take any action within BTC for any shorts because of the fact that it's really noisy. If we are getting to around 74, 7,500, it could mean a possible short, but at the end of the day, I would rather wait until the consolidation actually starts to break down to the downside, which would mean that we're going to see a lower low and then a lower high. We can see this formation similar to what we saw in the initial dump. And I think this is the next high probability situation because, yeah, we could look for a short up here or up here. We would have to put a stop loss above that zone, but with the correlation with the stock market, we don't exactly know how long it can continue sideways before it starts moving downwards. You can see with the Dow Jones Industrial Average, we were grinding up for a while, and then we started to move to the downside. So I don't have to be super early. I just have to make sure that I am starting to enter when the momentum does kick in. So that's going to be my plan. Look for that lower low and then try to enter on the lower high. There's probably going to be some sort of squeeze that's going to come into the market before we get an absolute dump to the downside. We can see this actually occur many times over. Let's quickly look at this structure right here. In early February, we did get a similar type of structure, although unfortunately we don't have the same structure right now. We broke this resistance zone and actually poked above this resistance, invalidating the zone, and then we'd have to look at it in a consolidation sideways. And what did we get right here? We did inevitably break to the downside, and then we're looking for continuation patterns. What do we see? We see a wedge pattern right here, and then you see a dump, pullback, and then our massive sell-off after that. So that's one example that we can see. Also looking at 1929, 1930s, we saw a very similar situation. So this is a completely different time, completely different asset class, and still same thing. We got a massive dump, retraces all the way to the 50 and 61.8 key level of supply. We get weakness from the bulls shown by this ascending trend line right here, connecting the series of higher lows. You see higher lows, and then you get a squeeze. Inevitably, it does poke out below. What do you see? Very similar to what we saw within BTC. You get our first push to the downside, and then you get your nice continuation pattern, like so. This would be an ascending triangle where you get a series of low, higher, low, and a horizontal level of resistance, creating an ascending triangle. You got to push to the downside, and then you get the massive sell-off retesting the low. If you do look back further, it does break that low and then continue on. So I didn't actually show you, but this is the true capitulation of the Great Depression. You think that this is bad right now. Yes, it's obviously pretty difficult with a massive drop, but look at how far this goes down, right? This is the type of market correction, not necessarily that I'm looking for, but I think it's going to go way beyond 60%, 55% in my personal belief in terms of how far we're going to fall. And there are price action patterns throughout this entire thing because you see a series of swing highs and swing lows, which obviously give you the ability to use Fibonacci's, but I just want to give you a good understanding of how similar this structure is to what we're seeing with the traditional markets within the SPY, within the Russell 2000, as well as BTC. And always keep in mind that there is a positive correlation within the stock market and Bitcoin. So if you are long biased, you think that Bitcoin is going to go up from here, you don't expect another dump, you're basically kind of saying that you think that the stock market bottom is in because of the positive correlation. So thinking about that, you might reassess if you are permeable. I don't exactly know. This is just intended to give you my personal opinion. Doesn't mean I'm right, doesn't mean I'm wrong. It could just continue to go up, and we would have to reassess our plan. And it's still a possibility that it could continue to go up. But this is our bias. I don't think that the stock market has bottomed, and I think that we'll see another move to the downside. So that is going to be the completion of the video. We didn't talk a whole lot about cryptocurrencies today, but I do want to really make sure that people understand why we are short bias. There's a high positive correlation with Bitcoin and the S&P 500 and the Russell 2000, which are traditional assets, in my opinion, are going to receive another sell-off from the market. There's a tiny bit of positive sentiment news that came in, but overall, we're seeing the job numbers, we're seeing the initial unemployment claims just absolutely skyrocket, and the stats cannot be more bearish comparing them to earlier this year. So that's the completion of the crypto market update. Thank you very much for watching. If you do have any questions, please drop them in the comments section below. If you found this useful, educational, informative, please hit the subscribe button. Definitely helps us out and helps the channel grow so other individuals can see this as well. So thank you very much for watching, and until next time, have a good one, traders.